Julia, we had something quite unusual this morning. We had a sort of cautionary outlook statement from Unilever, the consumer goods group. What exactly did they say?
Well, yes, it was unusual because Paul Polman, Chief Executive of Unilever, ever since he's been in place since January 2009, has never really made forecasts. So this was quite a surprise, really. And what they did is came out and said that sales growth is going to slow to 3 to 3.5% for the third quarter, which ended yesterday. And that's quite a big slowdown. So this came as a bit of a shock to the market.
Right, so the shares were down a bit this morning now. But why is this so significant?
Yeah, so the shares were down 4%, which actually is quite a big deal for Unilever. They don't normally have such big daily drops. And the reason being is that Unilever derives more than half, so over 55% of its sales come from emerging markets. It's more exposed than some of its peers. So therefore, obviously, people watch this very closely to see how they're performing there.
Now, emerging markets is obviously, as you say, a very big thing for these consumer goods groups. But so what is driving this slowdown then? And is it affecting emerging markets across the board, or is it sort of specific to one or more?
Well, generally emerging market growth is tapering off a little bit, but obviously it's been exacerbated by the expectations of tapering in the US. And as we know, that caused quite a big currency shocks within places like Indonesia and in India and also in Brazil. Unilever in particular is really exposed, especially to India. So any drop in the rupee has obviously had a big impact, both in terms of their input costs, which they buy locally, so then you'll have inflation there. Also, that's affected consumer spending because inflation obviously reduces their spending power, and then you've got the currency translation.
It's very difficult for very large companies like Unilever, obviously, to avoid currency swings. I mean, they're going to be hit by currency swings anyway, I guess.
It is. I mean, they hedge to an extent, not so far as on the sales side, so not in terms of the translation effect that you'd have from converting your rupee sales back into pounds, which is what they report in, but in terms of hedging on input costs. And they do hedge to an extent, but overall that can swing in both directions. So there's not much point in having a sort of much stronger hedging, really.
Okay. Well, Unilever's cautionary statement this morning was quite unusual. It hit the share price a bit, and it looks like emerging markets are definitely slowing. Thanks, Julia.